The rand has continued on its weakening streak. It still remains firmly in negative territory around 15 rand against the US dollar. The decline follows the dismal GDP figures showing that the first quarter contracted by 3.2%. This is the country and the ruling party rage on about the best economic policy approach for the country. The current account deficit also widened to 2.9% of GDP in the first quarter. Analysts say this points to the strain that the economy is currently under.
A weak currency opens the economy to an increase in inflation. This could force the Reserve Bank to hike interest rates. There are other factors that could exacerbate the rand to weaken further. These include international factors such as the increased global trade tension and continuous policy uncertainty from government. The recent GDP figures have also had a major impact on the currency. The economy contracted 3.2%, mainly driven by shrinkages in manufacturing and mining sectors. The mining sector has been under strain with the absence of policy uncertainty. South Africa sits on an estimated 35 trillion rands worth of mineral resources, but the sector has declined significantly as a share of the country's GDP from more than 20% in 1980 to around 7% today. The manufacturing sector also contributed to the decline in GDP. The sector has been in deep crisis for a long time. Its contribution to GDP has fallen from 18% in 1997 to just 11% in 2018. The sector has been battling under administered prices, chief being the ever-increasing electricity price. Added to this, in the first quarter of this year, the current account deficit widened to 2.9% of GDP from 2.2% shortfall in the fourth quarter of last year. South Africa relies on foreign portfolio inflows to finance the current account gap and budget deficits. These have widened in the recent years as tax revenues and fixed investments shrink. Analysts say policy clarity and certainty are urgently needed to cushion the effects of the pedestrian economy. At the same time, Moody's says South Africa faces complex economic challenges. It expects economic growth at just 1% for this year and the Reserve Bank to cut interest rates to support the economy. Diabo Seto, SABC News, Johannesburg.